What would happen if you stop moving your stop loss forever? What would happen? Today we're going to talk about the impact of moving your stop loss versus not moving your stop loss. I'm going to give you a way of tracking this through a trade journal in a very simple way, so you know if it's good or bad for you to move your stop loss and understand how you can stop doing it if that's a problem. So basically we're going to talk about stop loss management, one of the 8 trading demons I've made videos on. And if you want the full summary and you don't want to watch the whole video, you can just go down the description below and take the full summary, so you can just put the templates into your trade journal. So the act of moving your stop loss might be the reason why you're not profiting. I'm going to tell you why. So Trader Dante's insight, it's a really good one and it makes a lot of sense. And the way he talks about it's absolutely stupid to move your stop loss if you're entering off of a supply zone or demand zone or a level that's actually protecting your entry. So an example, you have an entry right here on this green circle, and if you would start moving your stop loss right here and you're targeting highs right here, you would be stopped out because we go back and retest this zone later. What you're really doing is you're fronting the resistance. So in reality you're protected by the resistance or the support level right here, but you're putting your entry here and now you're putting your stop loss here, so you're not protected at all. You're just a way for the market to collect orders, because a lot of people move their stop loss to break even because it feels good, because the emotions is much safer, because we're so scared of losing the money that we made. We rather see break even than seeing red, even if the results in the long term might be much better for you if you would just let every trade play out. And that's what we're going to talk about. So there's always a risk of early stop out, and this never made sense to me before he showed me a lot of examples that why would you put your stop loss where there's no resistance or support above. And many times the market will collect more orders before moving up, and it might be your break even trade that's going to be orders that the market collects before we continue back up. So the entry right here on this green, if you would just move your stop loss when we pushed up here and then we continue down without making a higher low, without continuing the structure, you would have been stopped out here. Instead of having a 2R win, you would have had a break even. And that's what we're going to focus on when we track the stop loss management. In your journal, I used Edgewonk. You can use whatever journal you want, but I like it because it's very valuable. And if you want that, just use my code in the description. But you add comments basically for every trade with a moved stop loss, and then you track the stats of moving the stop loss versus letting the trades play out. And you can do this over 10 trades, 20 trades, 50 trades, 100 trades. I would say do it on as many as you can, so you really can get it into your mind what's happening when you're moving your stop loss. Because if you can understand it, so you can change your belief about what you believe is true, if it's better for you. Let's say you would make 5R extra every month by not moving your stop loss, and you've seen this on over hundreds and hundreds of trades. Do you think you would still move your stop loss? Probably not, because you're so knowledgeable about what happens if you don't. So you track your trade management and you create 3 comments. So first of all, you move stop loss for no reason, which is out of fear. Then you have a neutral one, which you also need to decide what this means. Move stop loss to break even, and you need to decide when did I move the stop loss to break even. That could be after 1 to 1, it could be after 2 to 1, it could be after 20 points, 30 points, whatever that is. And many people would do when price pushes up 20 points, which is most of the time 1R. Then they take half of the profits off and they move the rest to break even. But you decide you need to create a process for this, because if you don't have a process for this, you're again just guessing, and guessing is gambling. So you don't want to be gambling, you want to have a process, you want to be consistent in that process. So the last one is let trade play out. It's just simply you setting a stop loss minus 1R and the TP is set, and it's done. What you want to do is collect and track this data. So now you've had some trades that you moved stop loss to break even, and you have some let trade play out. And that's basically here. Trade result with management is moved stop loss to break even, and then you have trade result without management, which is just minus 1R or plus 2R. This is the example here. We take 2R as the profit, and what you can see on these here, it's 10 trades, and you can see with management, which is more emotional investment, more emotions, just overall more thinking, more risk for errors, you get a total of 4R. But it feels better because you have 0, you don't have any losses here at all because you moved your stop loss. And on the other one you had 1, 2, 3 losses, but you get 7R instead. This is so important because many people are in this left column right here, but they could be in this right column right here. And if you think about this, the result wise is an increase of 80%, 70% to get from 4R to 7R. If you can increase your trading results by 70, 80% just by making a change like this, even if it would be 30% or 40%, imagine what you can do if you start battling all the trading demons. So really cool. way of tracking your stop loss management. The biggest problems I see, something I was doing before, I was profit driven by my management, and that means I was scared of letting the trades go from profit to loss, because if it's green, I want to be green. So now you're driven by your emotions, you're driven by the market, you're not driven by the process. And this is what they always say, the market is driven by fear and greed. And if you don't have a process that you can rely on and you can lean on, then you're gonna be focused on the profits, and the profits are gonna take you out emotionally, even if it's not the best result that you will get. So that's basically, it's about focusing on short-term gains instead of long-term gains, and it's about feeling good right now instead of feeling good later, about having better profits and more profits and a better profitable system. So we make the decisions by emotions instead of making it by the process. Very inconsistent results, because sometimes you will feel good, sometimes you will feel bad, sometimes you will take the profits off at a weird area, sometimes you will move it to break even, and then you will move it down to -1 hour, and then you will all of a sudden start tilting, because your emotional investment is much bigger, because you have to manually think about changing your stop loss all the time, and you're moving it around, and you're investing much more emotions than just clicking, going to Walmart, and you're done. I don't go to Walmart, I'm in Bali. But the other process driven approach is consistent improvement, because if you start tracking it the way I have it in the guide that I've made, it's always going to be consistent improvement because you know what the data says, you know what's the best for you know what works for you, and you know what type of personality of a trader you are. If you want this whole guide for all the trading demons, just check the description, and there's just a summary so you don't have to go through every video, but I do advise you to go through all the videos. And if you want the trade journal that I use, it's Edgewonk, and that's also in the description. If you liked the video, thumbs up. If you didn't like it, thumbs down. But just please let me know what you didn't like about the video, so I can get better and better and give more valuable things for you.